Good evening and good morning to everyone who's joined us today, and welcome to ESG Investing in Australia for the Future, a fireside chat with Mr. Cameron Brown-John, CEO of Federation Asset Management and Chairman of Special Olympics Australia. My name is an advisor to Federation Asset Management, as well as I run a boutique advisory firm called May Saffron, which likes to focus on companies and funds that have a focus towards the future and emerging and innovative themes. It's very topical today. Has over 20 years of experience investing in financial markets. He led the Macquarie Principles Investment Division for Australia and New Zealand, and his experience and leadership within Federation covers all sectors and all areas of the business. He holds a degree in law and commerce with first class honours and is an active member of the community, and as I said, the chair of the Special Olympics Australia, which we will touch on later. Federation is a private equity fund that invests in renewable energy, social education, and health real estate areas, as well as operating companies that meet a social and economic need. We've seen an increased tilt towards climate consciousness, particularly this year, and I think surprisingly, and if anything increased, despite the economic and social impact of COVID-19 on everyone's lives and the economy. As I said, we've seen groups as big as BlackRock come out with strong climate change indications in terms of what they're doing, and we've even from investors on groups like Rio Tinto and JP Morgan with a real climate consciousness. But ESG investing and social and economic needs-based investing doesn't extend to just climate. It extends much further than that. And Cameron, I'd like to kick off. What is ESG investing and what is social and economic needs focused investing?
Thanks, Alicia, and thank you for making the time to have me on today. ESG stands for Environmental, Social and Governance Investing. It's a class of investing, and investors like Federation use it as a framework, I guess, to evaluate corporate behaviour and to determine the future financial performance of companies. It's sometimes misunderstood that people that are ESG investors are seeking only to make an impact and only to make investments in benevolent areas, whereas that's incorrect. ESG investors are profit-seeking. Federation, where I work, certainly is profit-seeking, and we seek to try and protect our investors' capital first and foremost, to seek a prudent return on our investors' capital, and then we is to invest in sectors that we feel meet that social and economic purpose. Importantly, we think that one leads to the other, and even the academic research is catching up on this factor, that if you invest in an ESG savvy way, you're more likely to protect your investors' capital. You're more likely to make a positive return on your investment, not less likely, more likely. I think I was recently reading a piece, I can't remember the title, it was in the Journal of Finance, or the key findings were that in 73% of instances studied, funds that had invested in an ESG savvy way had made a positive return, or a return greater than those firms that had not invested in an ESG savvy way. I guess it would follow that in 27% of cases loss of this firm believes that you're more likely to protect your capital, make good money, if you invest with strong environmental, social and governance principles.
Great. So, yeah, in fact, we've seen that private capital classes have outperformed Why and how do you think that they have, and how has ESG focused investment fared during this COVID-19 crisis?
Yeah, the first element of that question was, why does private capital tend to outperform when the market gets rough? The question was, why does private capital tend to outperform when the market gets rough? And the second element was, how does ESG overlay into that, into that dynamic? Maybe the answer to why private capital the markets get rough is that private capital providers tend to be ostensibly investing over the medium term. The investment case is wholly driven by what will happen into the medium term. Most of the analytics is done on a through the cycle basis. That's not to say that all listed market or non-private investments are not done through that lens. Some some are, but some are not. And so they're invariably where all of the private investment classes are tending to take a longer term view than, say, the next quarter's results. It should follow that there will be lower volatility and that people are taking a view on a company riding a cycle. That is mental and social governance overlay to an underlying investment, because you're looking more than just the micro factors that would be affecting that business in and of itself. You're thinking about that business in the broader global context and what sort of macro factors could be affecting it. And so you're hopefully thinking through what downside scenarios could impact the underlying investment that you're making. Federation's made 6 investments since inception, and I must say, put my hand on my heart and say, for the investment case in all 6 circumstances, we did not predict COVID, but we did very much stress downside scenarios as to what could shock these businesses. I'm pleased to say that the businesses are invariably performing well, even through the current market dislocation. And I guess it's through that ESG lens that, whilst we didn't specifically pick COVID, we've, I think, hopeful through the COVID crisis in a relatively robust way through picking up some of those ESG principles that we apply.
And this ESG investment and sustainable investment is a real buzzword at the moment. How do you qualify people know the difference when they're looking at firms that claim this versus others?
Yeah, it's a good question. It is a shades of grey topic. So there's some ESG investors that are very much impact minded, and they will have a range of positive and negative undertakings that they will make as to the things that they will invest and they will not invest. One ESG savvy investor may decide to not invest in tobacco. One may decide that tobacco is fine. One may invest in nuclear, one may not, for example. So there are some broad guidelines, however, freely available on the internet. And the most notable, I guess, body that would certify people that are ESG savvy investors is the United Nations. There's a body called the United Nations. Federation is a member of that. And then in host countries, there's various versions of the same thing. Federation's headquartered in Sydney, Australia, and we're also a member of the Responsible Investment Association of Australasia, which is that relevant body in our headquarters. But such a thing, Alicia, invariably ESG investors that are worth their salt would, in their capital raising documents, say that what sectors they will or will not invest into. That's certainly the case for us, and invariably then they track how their ESG performance is going, investment case and or other factors that some investors that they have may wish them to report on. And again, that's the case in our instance as well.
And looking at you guys more personally, what made you set up Federation, and why did you what made you set up Federation, and why did you make the shift and go down the path that you have?
I'm 43 years old now, and throughout my career, I have enjoyed one thing more than anything else, which is businesses. And so always was seeking to do such a thing, I suspect in my own life at some point. No one's going to give money to a 30-year-old doing something complex like what we're doing. So now felt like my time to be doing that. I am one of 4 partners at Federation, and each of the other 4 partners have differing answers to that question. If I was to put it all in a pot and stir it around, invariably the partners came together because we saw that we had performed successfully over a period of time. We have, as a team, invested $2.3 billion of equity into situations that have exited. And we've invested more equity into situations. But as a private equity firm predominantly, we think that the right measure to, assess us by is the $2.3 billion of equity investments we've made into situations that have been exited, so people can see how we went. And since 2011, those investments have been made, and the weighted average, it's a good achievement over a long period of time on a lot of money. And we saw that there would be an opportunity to do that for institutional and high net worth and family office investors, and decided to take the plunge and almost take that entrepreneur step and see if we could make a go as an investment team outside of a major institution, even though we'd been working together within one.
Great. And the sustainable ESG, social and economic impact theme, what was the driving force behind that?
We intrinsically believe that if we invest in ESG savvy ways, that we will be more likely to be successful as investors and to preserve our investors' capital and to make a return on that. For a while, even when we were only investing our own firm's money, and invariably through that have now built up 9 years worth of skills within specific areas that play pretty well to the ESG landscape. So we have experts in our firm around renewable energy and sustainable infrastructure. We have experts in our firm around social and education related real estate. And we have experts in our firm within other pockets of operating private equity businesses like healthcare. So we are almost fit for purpose for an ESG related firm. We are just fortunate to have built up a body of experience within these sectors, and are really just doing what it is that we know how to do. Coming out of a major institution, people around us said, well, don't long short equity firm. Well, that all might be all good and well, but none of us know how to short stocks. So in practical reality, Alicia, we're just doing what it is that we know how to do and have done now for a long period of time. And that happens to fit, an ESG mantra. We're not doing solution in and around it. It's very much the other way around.
Yeah, and that could be a very backward-looking statement anyhow. This is likely the way forward in the future. Looking at some of the focus areas and buckets that you guys are experts in, and turning to renewable energy, I guess this COVID crisis has allowed us to see just the impact that our everyday lives is having on the climate around us. We've been able to see the Himalayas from India for the first time in 30 years or over 30 years, I think it is. And there are other anecdotes around the world of similar situations. What do you think that this period is teaching us about climate change, and how is that going to affect renewable energy?
Yeah, it's a good question. I suspect that the answer will not be unrelated to individual jurisdictions and what the governments and the people of those individual jurisdictions want to be doing. And it will certainly be the case in some more fossil fuel related baseload power, because it might fit their electricity grid. It might be easier to do. They might have access to the resources more readily than say other technologies. In the markets that we're playing, however, it will be the opposite. Australia, New Zealand, Japan, Taiwan, other countries within developed Asia, for example, are much more suitable to follow, say, the United States' lead, and some of the countries in developed Europe in and around, are much more suitable to follow, say, the United States' lead, and some of the countries in developed Europe in and around a trend towards renewable energy. There is in this country, for example, the electricity generating capacity is, well, about 15 of those 50 gigawatts of power will be retired over the coming decade or so. Generally, black and brown coal-fired power stations, they're reaching the end of their useful life. That stuff will need to be replaced with something, and invariably the greatest expectations that it is going to be replaced with renewable energy, solar, wind, and hydro capacity. There will need to be investments made into the transmission grid to make that done as seamlessly and as possible at the grid scale. There will be obviously exceptions to that rule. And then there's also the confluence of developing technologies, batteries, for example, smart grids as another example, that will really have a role in what the economics will mean. So that's where we're focusing our initial efforts in and around sustainable infrastructure, is the renewable energy generating opportunity set in our host country. It's a profound opportunity set, and it is, I think, driven home to governments by the people of this country. We've just been through a bit of a shock, being a healthcare related shock related to COVID. It's only heightened people's sensitivities to healthier living and ESG related factors. It would have compounded the views of many in the market that we should be looking to these sorts of technologies, but in truth, even in the absence of a COVID-related crisis, the market was heading that way anyway. It's just helped to ram home that message to government.
And I mean, the RBA sort of backs that up recently by coming out and saying that governments, federal and state governments, need to back changes to help the industry rebound and drive a post-pandemic recovery. Citing that sort of there was a strong surge in renewable, 5% of non-mining business investments across Australia in 2018, but then that plunged rapidly the year after, and obviously again now. Renewable energy sounds warm and fuzzy, and it makes us all feel really good, but obviously there are some stories where there seems to be cases of it being uneconomic. Or, obviously with this sharp investment drop-off, questions around it. How is renewable energy profitable, and how can private investors, understand and be sure that they can have a successful experience investing in it?
Yeah. So thank you. So it doesn't just make sense to build a wind farm anywhere and try and sell your electricity to the market at whatever the prevailing price might be. Doesn't make sense to build solar farms and put them anywhere and to sell your energy into the future market at whatever price may be. And there's major infrastructure projects like that, grid scale power stations that are bred of wind farms or solar farms permitted, let alone connected to a grid, let alone financed by a bank or something to get these things out the ground, unless it is that you have really strong technical capabilities around where is the power station going, ultimately what its end market will be and use will be, and then ultimately selling the power forward on a long-term contracted basis, so you're not taking merchant risk. And so that goes to, I guess, both the ESG-ness of what Federation tries to do, but also our background and our experience in investing for an investment's sake, and to make sure that we're protecting our investors' capital and makes that we look at, we try and develop on a wholly contracted basis. We find a power purchasing agreement or agreements to parties who will buy that power forward for a long period of time at a predetermined price. We then seek to finance the project beyond that. So the opportunity set, which I pitched to you earlier, it is a profound and large opportunity set. 15 gigawatts, if it was wind farms, would cost you somewhere in the order of $40 billion to build. Solar farms would be a bit cheaper. But so billions and billions of dollars of investment is required to go into this space over the next decade. So the opportunity set is massive. And the operating costs of a solar farm or a wind farm are far below what they are of other baseload power stations. So the profit potential is certainly significant if you can get the revenue side right, and if you can get the CapEx side of the build right as well. And so that's where we spend our time and our effort and our focus. And that's why equally you will read successful in doing that. It's like any industry. There will be winners and losers, even in a large opportunity set. So it is thus in every other sector around the world. Renewable energy is no different. And that's why that is our focus. We're pleased at Federation to be able to build our business around an expert. Is Stephen Panizza. Stephen and I worked together at Macquarie Group. Stephen ran the principal investing effort for Macquarie Group in Asia. He was based there for 15 years. He wouldn't mind me giving away his age in such a forum. 56 years old, very experienced man. And in the world of renewable energy, he's very well connected and knowledgeable. Between Macquarie and Federation, in fact, he fulfilled the role as Chief Investment Risk Officer of Australia's Green Bank, the Clean Energy Finance Corporation. And in that capacity, he financed billions of dollars of exactly the sorts of things that Federation does. And we would argue that he would be familiar with every project in the market, and most everyone in the market would be familiar with him. So we feel that we get our share of seeing.
And I guess that's the theory, and putting it into practice. You recently announced a successful bid for a large-scale wind developer, Windlab. I think it's over 7 gigawatts of development pipeline, probably one of the largest development platforms around. Could you please expand on that and take us through why Federation have seen that as an opportunity?
Yeah, so Windlab is a listed company, and we currently are trying to acquire it under, at the time of filming of this webinar, we're currently trying to acquire it by way of a scheme of arrangement. The scheme vote is in later this week. we expect to be successful in our pursuit of this company. Our investment thesis is very simple, is pricing the existing assets of the business. So the equity interests that Windlab holds in wind farms it's built before, and a small asset management business that it has on its balance sheet. We think the equity market is not pricing the very extensive development book, the 7.7 pricing, the very extensive development book, the 7.7 gigawatts that you point to across 50 projects around Africa, Australia, and the United States. And essentially that's what we like about Windlab, and we think that we can bring value to. We think we can finance a non-trivial we can bring value to. We think we can finance a non-trivial amount of that pipeline of developments and make them power stations, and essentially convert Windlab from its focus as a wind developer into part a developer and part an energy company that sells electricity to the world. And so we're excited to be working with some major investors in almost pivoting that business model of that company.
Great. Stepping away from renewable energy for a moment and looking at the Special Olympics, I was to get first-hand exposure to the Special Olympics when it was in Abu Dhabi last year. An incredible organisation, touches the lives of so many people, and I didn't realise until I met the team and got to know more about it, just how many Australians, in fact, are affected and are part of the Special Olympics. Could you expand on why you joined the organisation and I guess what you've discovered in your time as chair?
Thank you. So Special Olympics is a global organisation. It's in near on 190 countries, and it would be the peak global body for the promotion of the health and well-being of people with lived experience of intellectual disability. I'm, I guess, involved in that organisation and serve as the chairman of Australia 6 or 7 years ago, and I've been involved with the organisation ever since. I don't have any family connection or direct connection to the cause. I was invited to enter into sort of that pathway from a former employer and was pleased to make a difference to a cause that was doing some great things for the world. It's been a rewarding personal journey, I guess, for me, but Special Olympics, I guess, has also allowed me to open my eyes for the business opportunities that can be made of helping quite a disadvantaged opportunity set. In this country, the Commonwealth government has, in relatively recent history, recut the way that it funds the living with disability, both physical and intellectual, amongst other things. And we have identified an opportunity set that we feel that we can be relevant through Federation to assist and to invest our investors' capital, so fit the sort of ESG areas that we're seeking to tick that box. That particular vehicle is what we call Synergis. It's a disability housing trust. We're buying and building homes for disabled people, and the rent is indirectly paid for by the Commonwealth Government's National Disability Insurance Scheme. This is another large opportunity set. $11.5 billion of addressable opportunity right now. And for people's benefit, that's about the same scale as the investable opportunity, which is a tried and true and very well accepted investable asset class. And the government's incentivizing people like Federation to come along and make a go of it and to invest into an area of unmet need. And we're excited to be doing that. We've partnered with and to make sure that we're doing the right thing by our constituents, by our occupants, and the care groups that serve those occupants And we're pleased to say that that partnership with Social Ventures Australia has started and continues to go very well.
Great. And what is Australia and what makes them the best partner in this context?
20-year form of working with governments and care groups. They've got a social ethos and they've got an investment team that, like us, seeks to not lose a dollar but make a dollar. Seeks to not lose a dollar but make a dollar. The ethos and the impact and the connectivity with the people that we seek to serve were the sort of key elements, and it felt like a very good fit. From a federation perspective, we've got an expert real estate team that adds to may or may not be able to do by themselves. So it would be my hope if Social Ventures Australia is currently doing a webinar, it would be my hope that they're saying positive things about what they're finding from their relationship with my colleagues that are working with them on a day-to-day basis as well.
I read that you recently announced a first close on that fund and have brought in some impressive names like Hester and Suncorp and the Paul Ramsay Foundation. So congratulations on that, and it sounds really interesting and a nice combination of doing good and a nice combination of doing good whilst looking after the bottom line as well.
Thank you.
What about also in real estate? You have a childcare and education strategy. Can you touch on that quickly and where you're seeing the opportunities in Australia? That's obviously experience and past. And can you talk to why and where you're seeing opportunities and how your strategy is different?
Yeah, we're a landlord. We want to buy and build properties and rent them to a tenant that will pay the bills and pay their rent. So we're seeking to be buying and building childcare centres for tenants that are a high counterparty credit risk that we think will pay the rent, even when it is that a COVID crisis breaks. And I spoke earlier of, we didn't expect COVID, but in the instance of our childcare REIT, even though there'd be instances where less kids would be turning up to attend childcare, we have not been asked for any rental assistance by our tenants. They're all strong enough to have not required such assistance. So we're pleased with how that performance is going. In our instance, Alicia, it is a very small business as it currently sits. So I guess we're also fortunate that we're not, if you like, heavily skewed to what we do foresee a very real ability to build an entity of scale in what is a very fragmented and in many pockets underserved market. There has been some elements of the press that have written about this in the opposite, and certainly there are cases within the childcare industry, again, where there will be those less fortunate. There will be winners and losers, much as we spoke about earlier. The skew of our business is towards tenants that will pay the rent, and in childcare centres in metro areas only, in areas of high demand and low supply of childcare.
And we've got viewers watching from around the world right now, and I guess looking at Australia from a global perspective, economic growth that's being challenged now through this period, but we've also got pressures on our neighbours, particularly in parts of Asia, from the geopolitical tensions that have been brewing and are continuing to emerge. What, in your opinion, makes Australia a good place to invest at this point in time? And why should people be looking at Australia now?
Yeah, thank you. Rule of law, fiscal expansionism from the Commonwealth government, stable currency, financial markets, strong banks, access to capital, predictable legal system would be the typical answers that people would give. I would nuance my answer, particularly in the current climate, to however point out that I think that there will be challenging times for some subsectors. I will nominate, say, retail. Retailers, there will be a period of change within that industry. Period of change, no doubt about it, over the coming period. Fortunately, we know very little at Federation about those two subsets, and won't be, and haven't been investing and will not be investing within our private equity focus. We've got very limited experience in anything to do with consumer discretionary topics. Therefore, we don't invest there. We invest in non-discretionary places like healthcare. And in a market like Australia, there'll continue to be regulatory tailwinds. There is an aging population, and there's a well-funded set of investors like us seeking to be deploying capital into these sorts of places, which brings stability of opportunity set, stability of asset price as well. So there'll be pockets of opportunity within a market such as framework, but certainly it's not just a situation that all boats will float on a rising tide. I do not expect that will be the case in this market, and I do not expect that'll be the case in many markets either.
Yeah. I'll just take this moment to let the viewers know that we have Q&A link on the bottom of your screen, and type it through and I'll ask it. Federation also invests in emerging private companies that meet a social and economic need. Can you take us through some examples, Cameron, of some of the investments you've made, what they are, and what the companies do, and why you think they're exciting?
Okay, sure. So we've made 6 investments since coming out of the box. Maybe I'll just pick one of them, Alicia, in the interest of time. I'll nominate Sendle. Sendle is one of the first investments that we made at Federation. We invested in December of 2018. It's an e-commerce logistics business. It moves things from A to B, and it does it without its own trucks and without its own warehouses. It buys the margin in real time using its computers, and therefore does it at its marginal cost. It therefore passes cost savings through to its customers, and its customers really are skewed towards the SME market. Online shops that are moving 1,000 parcels a month or more, for example. Shops that are moving 1,000 parcels a month or more, for example. Since we invested, every month, Sendle has grown by more than 50% on PCP. Last month, it was up 225% on PCP. So it's a fast growing e-commerce logistics business. They have, at the request of a couple of their customers, now expanded beyond their host market, which is Australia, into the United States. The CEO has relocated to Seattle. There is a team up there doing great things to be building out their footprint up in the United States. They've signed up eBay, underwritten minimum volumes within Australia, but importantly are expanding the business up into the United States. And the opportunity set up there for these guys is profound. So we're really proud of how that investment's going, in particular, because that's why we invested. We gave this company the growth capital to move into the United States. Shareholder, the CEO, is the largest. And this is a mindset for us. We're not in the business of thinking that we know more than incumbent management teams, and we're not the private equity firm that enters a business to pursue a cost out strategy and to say that we know more than the people that have been pursue a cost out strategy and to say that we know more than the people that have been building the business. To the contrary, we look for businesses and management teams that we like and a growth equity thematic that we like, and we support these people with capital and help them grow their businesses. And we're pleased to say that certainly that thesis is playing out well in Sendle's instance. In terms of the ESG overlay that we look for, Sendle's a B Corp. That's the US equivalent of an ESG friendly business that we would look to be doing. It's a carbon neutral courier as well. So in and of itself, it seeks to have a range of ethos things that that Federation, would also be pleased to be noting and reporting on as well.
Great, sounds exciting. And I guess just for the last question before we wrap up, Federation are an institutional house boutique manager, but you don't just offer institutional funds management to institutions, but you offer it to also retail or everyday investors. Would you like to touch on that on offer?
Yeah. So you mentioned earlier we were pleased to invite our first set of institutional investors in relatively recent history, being Hester and Suncorp and others, and we're pleased for their support and hope that others join them on the journey with Federation. And we've set ourselves up to make institutional grade investments available to everyone. We'd have several hundred investors, 300 and something investors right now, and these people would span from, well, institutions through family offices and high net worth clients down to accept individual investors as small as 20,000 Australian dollars. We're licensed to do so. And really the investment team at Federation is just that. It's a team that's experienced of finding investments, managing investments and exiting investments. We don't have deep experience in all of the back office. We don't have deep experience in all of the back office and administration side of a fund manager. So we've partnered with firms to provide that. We've contracted those to industry leading firms. In the instance of administration and fund reporting, it's Apex, the global firm, and responsible entity, to make sure that we're providing the best possible corporate governance to our investors and the best possible protections over the way that we're doing things. We want to be held accountable to be doing the things that we say that we're going to do. We've procured all the appropriate licensing, sophisticated investor money, but also retail money. And to jump through those hoops requires additional fact checking and background checks on people like me, I guess. But we've decided to take on that extra cost and take on that extra work because we believe in what it is that I said, that additional grade investments across our asset class are available to everyone.
Excellent. So ESG focused social impact investing with an institutional team who've been working together for over 10 years and have extensive experience in the sectors, it sounds, it sounds like a great idea and a great team and a great offer. If there's no other questions from anyone, I'd like to wrap up now, and thank you, Cameron, for your time and this opportunity. And please, with myself or directly with Federation, if you'd like to learn more or have any further questions on this topic and area.
Thanks very much.
Thank you.